This is Scott Becker with the Becker Private Equity and Business Podcast and the Becker Business Minute Podcast. Thrilled today to visit with RSM partner Rick Kes. And Rick's going to talk about what he's watching in private equity currently. It's a fascinating week. Bain issued a report saying even though transactions were down last year, global deal activity is still very solid by historical standards, even if down from 2021. They also pointed to sort of a slowdown in the market in the first half of this year, an expectation that there'd be lots of deal activity in the second half of the year. Bain also pointed to a crazy amount of dry powder that's out there between commitments on the debt and the equity side. We're going to get Rick's take on what he's seeing in the private equity market currently. Rick, your sense of what are you seeing in the private equity market? I know your firm has been busy. What are you seeing out there? What's your sense of where things are at and where they're going to be the second half of the year?
Scott, I think you're right. We're still very busy on the transaction side, supporting lots of deals across, all the verticals that we support. I think there has been obviously a slowdown in some of the transaction activity, just, macroeconomic trends impacting that obviously with labor and, inflation and interest rates and all those things. But, I think we're still seeing a pretty active market. And we're hopeful that 2023 will end up being, much better than I think a lot of folks predicted. And I think we're, bullish on what Bain had talked about is there's lots of dry powder. There's still lots of attractive assets. So I think, we're hopeful that there's still a lot of deals that will come through in 2023 that we can continue to support.
Well, fantastic. Are there specific verticals that are busier than others? Has healthcare remained more busy, less busy? What's your sense there?
Yeah, I mean, I don't know if it's just a natural inclination that healthcare seems to be, because I follow it the closest to be the busiest from our client deck perspective. Private equity groups still continue to be very interested in, rolling up, MSOs and DSOs and other, kind of roll-up strategies. So we're still seeing a lot of that. But, it's, other industry verticals seem to be busy as well, but not probably to the same level. I mean, private equity has always thought healthcare being an attractive asset in a potentially, recessionary environment. So I think that's probably some of it as well.
Thank you. And you at RSM have stayed quite busy. Tell us a little bit about what you're most focused on for the rest of this year. Is it making sure you're staying very close to customers, trying to originate deals, trying to give good advice? What's the big focus for the rest of this year?
Yeah, I mean, for our clients, I think you're right. I mean, staying close to our clients is very important. So, we're regularly attending, industry meetings and things like that to be able to interact with our clients and potential clients on a routine basis. But, I think for when we get engaged with a client, our biggest impact is going to be focusing on their operations and helping them become as efficient and effective as possible. So, usually through the use of technology is kind of our thought process. So, focus on automation, focus on process improvement, things of that nature. So that's really where we're focused on.
And there was a lot of discussion of that exactly in the Bain sort of report on private equity field, that a lot of focus this year is not going to be on companies getting more valuable through multiple growth, through the growth in multiples, but through improving operations, improving sort of the management of businesses. Is that your sense of this, that less sort of like that multiples have obviously crept back down versus up, so companies are going to be more focused on operational improvements and just getting better at running the businesses? Is that your sense of things?
Yeah, very much so. And I think especially, I think if the company, has recently, maybe in 2021 or 2022, they did a few bolt-on acquisitions and, maybe there's, disparate processes and different technologies across the board on their platform. I think a lot of those organizations are sitting back and saying, well, maybe instead of doing that bolt-on in 23 that we were expecting, really what we should do is hunker in and figure out, how to get everybody on the same system, how to get everybody on the same process, how to centralize everything so that, we really can come together and build those synergies that we modeled in our expectations when we made these acquisitions. So I think there's a lot more focus on that than there is on kind of that inorganic growth that you're talking about through acquisition.
Rick, I want to thank you as always for joining us on the Becker Private Equity Business Podcast. I love getting a chance to visit with you and hear the perspective of yourself, of RSM, and more. Thank you so much for joining us today.
Thank you, Scott. Appreciate it.